It's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders across all markets. So if that sounds like you are in the right place at the right time. Now, I do just want to give a warm welcome, whether you are a new viewer or a returning viewer or a subscriber. Thank you for clicking on this video and spending some time with me today. I really love when you guys engage. If you do get to the end of this video and you find it helpful, I would really appreciate it if you can like the video, leave me a comment to let me know what you learned, or even share with someone else who you believe that this information could benefit. Not only will it help you and build your confidence as a trader, knowing you're tapping in every day, but it also will help the channel grow. So I really appreciate you guys' support. Now, if you want to connect with me outside of YouTube, even though I do post videos every single day, you can connect with me on TradingView and through my online community, which you can find the information down below in the description box. Now, the community is free for 7 days, no matter when you sign up. So you can see some of the trade ideas that I post throughout the week. You can look at some of my longer lectures, and you can just have a structured learning and community feel. And yeah, I encourage you guys to get nosy and explore because all are welcome. Now, in today's quick video, we're going to be talking about the simplest price action strategy that you can use in your trades. As always, I try to keep it focused on the basics and the fundamentals of trading so that no matter where you come in and find this video, you should be able to understand these basic concepts and apply them right away. Now, if you do make it to the end of this video, I am going to ask you to subscribe to support the channel because it's going to be helpful and you'll never miss the other content that I have. Now, if you are new to trading or you need a refresher, we're going to be focused on how you can either buy or sell in the market and how to know when to take entries and exits for both of those. Now, a lot of people tend to stress out about their entry points and when do you get into the trade, but that's only half the problem because you also need to know when to get out. And you can get a lot of this information directly from the candlesticks that you see on the chart before you start to gather extra confirmation or sometimes even confuse yourself with indicators. Now, price action is exactly what it sounds like. It's what is the price doing for a certain amount of time and how is price reacting at a certain area or what we like to call key levels in trading. Now I'm just going to back up the market to here and we're going to start to explore this price action strategy that I want to show you. Now, again, you can buy or sell in the market. Typically, when you see a red candle, that lets you know that price was starting at one place and then it dropped and closed down lower than where it opened. And again, these are represented by red candles. Now, if I were to look at this one particular red candle, I can see that price opened at around 3,327 for the price of gold. And because we're looking at one candle, right, price closed at 3,316. Now that's a sell candle. We can see price dropped. If you guys can see that, just go ahead and drop a 7 in the chat. Now, price can drop for 15 minutes because we have this on a 15-minute time frame. But even if we were to go down a little bit further, we can see price was dropping for a significant amount of time from 6:15 to 9:45 p.m. And we actually got down from 3,327 to 3,267. Right now, that is a selling market. You can categorize a selling market because you'll see or a selling trend, right? Because you can be looking at this on a 5-minute chart or the weekly. Price will go from a higher price to a lower price. You'll typically see more red candles than blue candles in that time frame, letting you know that the sellers were in control. And you'll also see how the market was high and then it dropped. It had a lower high, right? And then it dropped and it had a lower high. And we can see how price continued to sell. Now, if you were looking at a buying trend, it would be the opposite, where in this case, price would open at the bottom. So we're going to look at this blue candle here. Price opened at the bottom. We can see price open at 3,313. and it pushed up about $6 to 3319 if we were only looking at the market for that 15 minutes. Now we can come down to where the short buying trend started, and we can see price pushed from 3,272 all the way up to 3,319. Now, something interesting I want you to note when it comes to trading is that the market has these patterns and it will tend to revisit the same levels over and over again. So you will have a little bit of a guideline of where you should be getting in and out of your trades. So, for example, if we bought here at one point in time and the market pushed up to this area of resistance, if we were to sell, right, we see that the selling trend is picking up. We run into an area of resistance. We can see that price sold back down to our previous support, right? Then we can see that price bought. It didn't get quite as high as it did before, again, confirming that selling trend. But when it did sell, it sold back down to the same support. So being able to identify support and resistance or these previous key levels where the markets have bought or sold, it's going to be super important and the first step to determining your entry points and using price action. Now, if the market isn't distinctively selling where we can see those lower highs being created, or if it isn't distinctly buying where we can see those higher highs being created, the market is in a period of what we call consolidation or it is ranging. Now, a ranging market, this is where you do want to consider more of the data instead of one just individual candle, right? Now, if you guys are still watching the video, just go ahead and comment down below. Consider the data because when it comes to trading, you want to trade what you see, not what you want. And that's going to be extremely important when it comes to the price action strategy that we are about to review. Now, as we can see, the market was buying at the same place, making this a strong area of support. We had a little bit of a breakout here, but then we see the resistance being created at the same level. So we could assume that once the market gets back to this price of 3,301, we should be looking for a sell. And if the market gets back to this price, 3269, between 3269 and 3272, we should be looking to buy. But what actually happens when the market breaks out of that pattern and we no longer know what to do? If you actually notice, this market isn't too close to the top of the range, right? It's about $8 and it's kind of far from the bottom of the range. And what I try to do to avoid taking unnecessary losses, I don't really like to get into my trades in the middle of a range. And if I do, I probably was rushing or I just did not do a thorough analysis. Now, this is where the price action comes in. Because we know that this is a strong area of resistance or a place for potential selling, and we know that this is a strong area or of support and a place for potential buying, we want to look at how the market actually reacts around these areas. Now, if the market were to come back to this price and have more resistance, we could enter that trade for a sell. If the market were to come back to this price and show that this level is supported, we can enter for a buy. But if the market breaks above the previous area of resistance and it closes above that area of resistance, that's a sign that the market is no longer ranging and it wants to buy. If the market were to cross and close below this price, that could be a sign that the market wants to sell. So it really comes down to just waiting to see what happens at the previous key level. We can see the market got very close to that key level, but I wouldn't take any action just yet because I do see a lot of momentum on this candle, on this blue candle, and that's something that you want to pay attention to too. Remember, if you see a lot of blue candles in a row and they're having that huge momentum where price jumped from one place to the next, right? It was pretty significant in a short amount of time. You want to pay attention to that because that could be a sign that the buyers are picking up momentum, just like we see right here. The red candles were getting stronger and the sellers picked up momentum, pushing it back down to that previous area of support. Now, if you guys are following along, I know it sounds repetitive, but it's very simple. Right? If you're following along, just go ahead and comment some sevens down below. And we're going to keep paying attention to how this candle is reacting around that previous key level. Now you see what we have here is a break of structure in addition to the momentum being picked up by the buyers. We know momentum is being picked up because we can see that there are a series of blue candles and they're really strong. They have strong bodies, which means that price has no problem going higher. And there are a lot of people who are agreeing with the current way that the market is going. So now that price has broken structure above this previous high, that is where we would want to enter our trade for a buy, right? So we would enter for a buy, and you can set your stop loss right at the previous area of resistance. Or if you want to be super safe, you can come all the way down here. And as far as your TPs, I would just use a previous high, right? You just want to make sure your risk is not higher than your reward. So let's just go about a 1-to-1 and we're going to see what happens in this trade. We can see that within 15 minutes, our trade hit TP and all we had to do was be patient. Now, you're not always going to get what you want in the market, but if price action aligns and everything is making sense, just go for it. And you want to use those previous highs and lows as your take profits. We're going to go with another example here. We can see the market was in a period of consolidation, right? We're going to use our horizontal raise, right? So we're going to say that the market was selling there, right? We're going to say that the market was buying there. We have a little bit of a range, right? We bought here twice. We sold here a few times. Now we just want to continue to see what's going to happen next, right? Is the market going to continue to resist off of that previous resistance, or is it going to be supported and push up? So we go to the next candle, we see we get some resistance, right? We go to the next candle, we see that we have a break of structure. It's only been about 30 minutes. Now we would want to use our previous lows as our TPs, right? So we can have a TP1 and a TP2. Let's get in for a sell here. We're going to set our stop loss above that previous high. We're going to set our TP at that previous low. And we're going to go ahead and we can see again within 30 minutes our take profit was hit. Now, again, this strategy is so simple. It's just a matter of patience. And are you able to identify these previous key levels? Now I'm just going to scroll on my chart and I just want you guys to see if you can identify breaks of structure and then see what the market actually did after that point. Right? We have another example here where there was a period of consolidation. There was a break of structure. We have TP at a previous low, right? And this is one of those things where once you see it, you really can't unsee it. Here we have a period of consolidation. We have a break of structure. We have TP hit at a previous high. So this is really the only price action strategy that you need, no matter if you are new to trading or you've been doing this for a while and you want to simplify your process, right? So that you can be more profitable. This is a strategy that you can use and you can trust. It does take a little bit of patience and it does take a little bit of practice, but that's why we're here. Now, if you've made it this far in the video, I'm just asking you to give the video a thumbs up, leave me a comment to let me know what you learned, and don't feel afraid to subscribe to the channel. It's only going to help you because it's all about conditioning. The more you see something and the more you practice, the better at it you'll be. And if you want to be a better trader, you can become a better trader. And I'm definitely here to support you with all of this content through my course, through personal mentorship. So if you feel compelled to connect outside of YouTube, all of my information is down below in the description box. But that's really all I have for you guys today. Until next time, rich friends.